All right, all right. Good morning, traders. Happy Sunday, everybody. Welcome out. We're going to give it a minute or two here. Just let the stragglers come in, make sure the audio turns on for everybody. Good morning, Elizabeth. Wonderful to see you. Glad to have you. Good morning, Sandy. Actually, no. What is it? What time is it where you are, Sandy? Good morning to you, Perry and Stephen. First day. Love it. So glad you said hello right off the bat. Strongly encourage questions, comments, and of course, compliments. 2 a.m. Monday morning. Good morning, Michael. Good to see you. All right. I think we have a good enough group to start. Let's just go right in. Welcome to the Market Watch Group weekly market prep. You know this is my favorite day, the day we know the chimp is asleep. And Elizabeth, that's not going to make any sense to you, but you'll hear me talk about the professor, the chimp, and the computer. And you can probably start to draw some conclusions. The computer being the automated aspects, the professor, the logical, the rational, the deliberate, and the chimp is the emotional, the erratic, the unpredictable. All right. My name is Scott. It's wonderful to see you guys. It's snowy where I am. I sent one child home yesterday. There was a window where the snow stopped. She made it up back to school. And the boy will leave. There's another window. There's another window of no snow out here in the Rocky Mountains. My son has to get from Salt Lake City up to Billings to get back to school. He's going to leave tomorrow. So the holidays are officially over, and I'm very sad. Sandy says, make sure you stay around, Elizabeth. There's not many women, but they contribute so much to the group. And by they, I mean Sandy. Okay, let's dive in. Real quickly, here's the disclaimers. As always, remember that this is for education, illustrative purposes, etc., etc., etc. Here is our agenda. Market posture. Okay. Great call out from Michael last week where he said, hey, you know, we're seeing both the both the longer term, the 3-year and the shorter term hitting some resistance. We knew there was some headwinds that we could possibly hit. For my assessment, they weren't much. And that's obviously what we're going to be talking about today is what are we seeing from the market? Stephen, if you didn't notice, posted his update. I love that he does that prior to our meeting today, this morning. He has dialed back a little bit, and his final conclusion is still bullish, but a little more cautious. Great. Love that. Michael says, can you post your email on the email you send every time? Easy enough. Yeah, I could put that in there. We're going to look at the economic calendar. What do we have coming up? Last week, we had employment data, which came out quite strong. So strong, in fact, that the market didn't like it because they're like, oh, no, we're not going to get our cuts. We'll take a look at those expectations of what the cuts are, what the market is adjusting to. And here's the thing, right? You'll always hear people say, oh, the market's priced in, yada, yada, yada. The market's priced in a quarter point hike, quarter point cut, half a point cut. The market's priced in. And people are like, what does that mean? What do you mean we priced it in? But if you look at our posture, how the market's moving, and then also look at the futures and how the futures are pricing in rate cuts, and that's something that we're going to look at. You can see that even though the expectations have dialed back quite a bit, the market didn't, right? The market didn't dial back that much. It was quite reasonable. Is it over yet? We're not sure. That's what we're kind of coming to figure out. Is this small pullback done? Is the dip over and we're ready to anticipate a bullish trading window? Okay. Sector searching. I thought I said a sector that we should look into. And now I can't remember what it was. If anyone remembers what I said about a sector that we should maybe dig in a little bit, let me know. We'll look at our watch lists. The watch list is strong. It still looks fantastic. I feel really good about where our watch list is and what it's representative of. And there's plenty of signals throughout there. Also, I'm sorry, bear with me. I picked up something. I've got like a in congestion and I've been coughing. So if I cough into the microphone before I can mute it, I apologize in advance. Biotech press says, okay. Oh yeah, it might even be all of, did we say healthcare in general? Maybe, yeah, we'll take a look. May as well. Trading plan section of the week. Interestingly enough, this week's trading plan section is section 2. And section 2 is market posture, which is about exactly what we're about to do. So, okay, let's get started. And we will go from there. All right. You should, let me move this over. This is on the wrong place. Give me just a second. All my Thinkorswims shut down on me. I had to restart them, but that's okay. Here we go. And let's get this back to, oh, no, that's the wrong account. Oh, sorry. Sorry. Goodness. Well, we'll start here. This is our posture from last week. While my Thinkorswim reloads, I thought I had turned on the live account, but it was the demo account. Oh, thank you. Press said the foundational trading sessions from last week were excellent. Can't believe I went this far without, you know, what's funny is that I'm glad you said that, Press, because that was absolutely the intention. Was I think there's so many, I know that's the case for me, right? Where I'm like 4 or 5 years in, and all of a sudden I'm like, gosh, I'm coming across things that really should have been presented to me earlier. Now, you know, my experience was a lot more trial and error, but for an organized approach to the market, I feel like really making sure all of the again foundational, the, you know, what do we want in the cement that we pour to build our house on, you know. I really appreciate you saying that. That's the intention. So for those who missed it, and especially Elizabeth, we're only the first 2 sessions in. It's a more condensed foundation. So last time it took us 24 sessions. We're going to do it in 16, but all the same content will be covered. You have access to the old recordings, but you can join us for the new ones. That's the Tuesday, Thursday classes, 8:30 p.m. Don't miss it. And then when we're done with that, we're going to hit options twice as hard. Instead of doing 8 option sessions, we're going to do 16. So I've got the next 4 months planned out, and it's going to be absolutely incredible. I'm excited about it. So I hope you guys are too. We are working diligently on what we want the alert service to look like, which is basically, I want to make sure that I'm giving ideas for trades, but not giving trades. Right? You see what we might buy a stock, we might buy an out of the money call or an in the money call, we might do a bull call spread. I want to give the premise, the idea of where would I tighten my stop, where would I ease some stress on the trade by taking profits, where's my ultimate target. So I'm working with Gary, and we are going to be looking to launch that here in the next week or 2. So we're really excited about that as well. And if you're wondering, are you stalling, Scott, because your charts aren't up yet? The answer to that is yes. They're coming up soon, though. Okay, so last week, what were we? And oh, Steven, I'm telling you, the last kid leaves tomorrow, and I'm going to have a lot more time, as I've said, to he's already talking to me. Yes, I will, and I will then share with everybody so that we have an easier way to do this. Steven's done it. He's shaking his head, and he's a little bit wondering, what the hell's wrong with you, Scott? Nothing. It's just been busy. It's the holidays. I'm a little sick. Those are my excuses. Okay. Last week, what were we? 6.5. Strong. We've been strong. We just rallied up into the 6s and have stayed there. Okay. We've already acknowledged that with this week's buyer fatigue that we saw. The buyers clearly just sort of took a break. Now we're getting a chance to see the sellers, and how strong are the sellers? What are they showing us? Well, they've showed us a little bit. Right? We already acknowledged the volume is probably going to drop because we saw some increased volume on the selling days, and we're like, oh, okay. There's sellers there are still sellers out there. They haven't disappeared. So that's part of it. So here's where we're going to start. Long-term trend. You can see that we've been a 1 for over a month now. We don't expect that to change. In fact, prior to that, you can see where we're a 0.75 for quite some time. The long-term trend is not, we don't expect that to shift frequently. So if you ever find that you're like, I'm a 1, I'm a 1.25, I'm a 1, I'm a 0.75, I'm a 1.2, if it's moving around a lot, I think that you want to reevaluate the analysis on that. Because it's not supposed to change that much. This is the long term. This is what we think when we put ourselves in institutional shoes. And institutions aren't like, I'm bullish, I'm bearish, I'm bullish, I'm bearish. It's more steady than that. We do expect our short term to fluctuate, our volatility to fluctuate, but not the long term. So let's start here. And Elizabeth, I'm going to overwhelm you at a certain point when I show you the content library. There are just vast amounts of videos now. We have videos on each of these components. So if you're like, okay, I want to go through these one at a time, there's a video for each component. We have videos for each component of our trading plan. So there's plenty to support you as you're trying to get up to speed with what we're doing. And I'll make sure I show you that here later today. Okay, so let's just dive into this thing. Oh my gosh. Okay, hold on. I logged into the wrong one. So bad. Okay. Thinkorswim is killing me today. I will change it to the live account. I need my watch list, but we will go ahead and get started. I can do it. Actually, let's jump to the calendar here while this reloads one more time. We're going to just take a quick peek at the economic calendar. What do we have going on this week? What did we have going on? Live trading. That's better. Okay. Last week we got 8.8 million job openings as expected. Manufacturing stayed or actually improved a little bit. ADP employment, which is private payrolls, increased. Jobless claims decreased. Department of Labor increased. And unemployment remained unchanged, even though they thought it was going to get better. What was the net effect of that? If you look at our FedWatch and what the expectations are for interest rate hikes, you can see that they dialed back, or interest rate cuts, sorry. They dialed back quite a bit. Now, this is January. So this is the meeting that's coming up in about 3 weeks. That's at the end of the month. The odds you can see are significantly, 94%, that it stays unchanged. This is where we're seeing the change, is when we look ahead at the March 20, the May 1st meeting. So in March 20, at one point, it really was heavily in favor of a cut. And you can see, sorry, let me just see one more time. You can see that as we look at this here, it's still almost 2-1, almost 2-1. At one point, it was 4 or 5-1 for the cut. So there's still more expectations of a cut than not, but it's dialed back a little bit. As I said, UBS came out with projections of 2.75% decrease in the Fed rate in 2024, 2.75. I don't see any way that could possibly happen, especially because it's unlikely they take the first one. So there's only 7 meetings to try to get 2.75 cuts. That's just not going to happen. However, as we move forward to May, you can see that now there's hardly any expectation at all that we'll be where we are now. And that there's equal odds, and in fact, slightly better, that we're down a half of a point. So there's the first quarter of a point here in this 500 to 525 range. Here's the second quarter, 475 to 500. So even though the market's expectations have dialed back some, there's still better than not probability that we are down a half of a point by the time we get to the May 1st meeting. Okay, now I actually have some charts ready to go. Let me get us over to SPY. So what is that doing? So it's slowing down a little bit, the expectations. And you can see this has been the biggest consolidation we've had since we were in the, August, September, October consolidation. It wasn't a correction for the SPY. It was a correction in the Russell and in the NASDAQ. So they did dial back about 10%. But you can see here, we went from about 460 down to about 410. Actually, maybe it was, now that I look at that. Maybe we did get full correction. I maybe have been describing this wrong. What is a correction? You might be thinking. So a correction, technically defined, is 10% decline from the high. When we talk about a bear market, that's actually has a technical definition as well, which is 20%. When the market retraces 20% from its most recent high, we then consider that to be an official bear market. So it's not just like some committee out there like, you know what, now it's bearish. It's a technical definition. So if we take 460 times 0.9, 414. Yes, I'm okay. I don't know why I missed that, but you can see right here, it was a full correction. We did 10% from this high back to this point here. And if you remember, while we were in that time, we said, look, corrections happen within the context of bull markets. And then we were able to pop out of this very quickly. Since this time, it's like one day. This is the first attempt the sellers have made since late August. It's basically been a slew of buying, and it's been fun, right? We've had some great bullish trades along the way. We got bullish very quickly and continued to get excuse me, continued to get so. Now what? Okay, now we get to assess this. This drop by itself, to me, isn't that bad at all. I mean, if you look at that, I think we're about maybe 2.5% from here to here. Very mild. We did, though, you can see, have some increased volume. So we never like to see the sellers building strength as they sell. However, that's not what we saw. We saw some strength by the sellers, but you'll notice that the strength is diminishing as it comes down and tries to find its next support level. That's what we're looking for. It looked like Friday might have been the day. I wouldn't be surprised if any of you said, yeah, I took a trade or two on Friday. Let me know if that's the case. The one deterrent may be not necessarily, excuse me, not necessarily wanting to carry a trade through the weekend. So, okay. So let's get to our actual scoring. Give me just a second here. Okay. Let's get this thing to a weekly chart. Oops, nope. Weekly chart. You can see my trend, what I'm scoring and why. Remember this, we are not trying to score. So my score here is a 1. We are not trying to score the next little bit. We are maintaining the score as our trending score, right? This is our trend score. This trend, what happens right now if we start to pull back down, if we pull all the way to here and then turn, that's all the same trend. right? My score here is the same as my score here. We're scoring the trend, which is the angle of these two lines. So the fact that we're coming down from this is not going to diminish our score here. What it may diminish is the way you evaluate your trading posture. So right now we are doing market posture. What is our overall assessment of the market, the conditions, and what's going on? And we have this overall score. That's not our trading posture. Our trading posture is our day-to-day perspective. We don't really care right now if we're closer to support or closer to resistance. If we're looking to trade, then we're thinking about our trading posture. So it's very important. And if you look at, we may as well, because this is the section this week. If you look at our trading plan and you look at market forecasting, you can see that we are very much distinguishing market posture from trading posture, right? These are the routines that we're going through right now that lead us to market posture. Once we have our posture in place, then we go day to day. That's why we only work on market posture once a week, because during the week, we're thinking about our trading posture and how it sits under the context provided by our market posture. These are the implications that we're trying to understand. What kinds of trades? Sorry, let me get rid of those lines. What types of trades? How long should they last? How much risk are we taking? What systems and strategies make sense? What kind of tactics am I implementing? And as always, am I thinking about a hedge? And we did put a hedge on this week. It was only a half a hedge, but I did put one on. Okay. What does that mean for my score? Staying the same. No change, right? This score does not change. It's still a 1. It's still in that bullish context. And here's what I want you to remember. We're not going to just assume that because we're here, we're going to do this. It might pull back a couple of weeks and then turn. It might give us one red week followed by a white one, and then red, and then 3 white in a row. And if you look at this here, that was actually quite a nice bullish time. If you were with us, remember that in June and July, those were some great trading months. Imagine if in June and July, you saw this one red candle like this one here, and you're like, oh, that's it. We're going to pull back. Imagine if you saw that and you missed. There was 2 strong trading windows that we took advantage of. Those of you who were with us back then, that was great. It wasn't until we got over here that we're like, oh, things are starting to get ugly, and we kind of sat most of this out. So, okay. Okay, score stays the same. Let's go to short term. Okay, what's happened on the short term? Even just within the last week, we hit our highest point. That's a higher high. Here's where it gets a little bit tricky. So for me, as we went through here, we kind of did a funky little transition, and you can see the stochastics did indicate that this was a low before we made one more attempt. It wasn't much, a little bit slower, and then we have this. So the question you're asking yourself is, how important do I consider that? Whoops, I just erased my own line. How important do I consider that? Is that the low? For me, I'm okay with us getting below that point a little bit, mostly because of our proximity to the 50-day moving average. We're well above the 50. So I think that in and of itself is bullish in its implications. So the fact that we're a little bit below that, I'm okay with. I'm actually thinking to myself, what we're waiting to see is, does this eventually find, oh, that's not what I wanted. Sorry. I wanted this. My thought is that we're possibly looking to find a new trend that looks something like that. Right? I don't know yet. It depends on if this starts to bounce, but if that's the trend, I would probably think that's around a 1.5. Remember that the trend score is out of 3 points. Right here's where the number is. We're at a 1.75. I don't see enough I don't see enough to drop the score yet. If it does confirm that trend that you see I have drawn, I probably would just round it out at a 1.5. So this could drop just a little bit here in the next 2 or 3 weeks, potentially. As of right now, though, what I see here is ongoing bullishness. But yeah, we haven't had a great ability to find a trend. Back here, we're like, this is not the trend. That's unsustainable. We said that. We knew that. We started to think maybe it's finding this as a trend, but right now we're a little bit lower than that. So we have to be flexible about where do I draw my lines and connect my dots. So if it ends up looking like this, that first one would have maintained a 1.75, maybe even gotten to a 2, but the second one's going to ease back a little. I just don't think we have enough information yet. Do you disagree? How are you scoring short term on your end? I'd love to hear a few people throw their answers out. Let me know. Steven says yes, same thing. Love it. Michael is saying drop it, and I'm not surprised. You were a little bit more on that ease it back even last week. Great. You probably already have, and I love that. Absolutely. Fantastic. Okay, let's keep going. So for me, unchanged. Michael's maybe dropped his back a little bit. It's going to ease this back a little bit. Understandable. Volume, we've already seen drop from 1 week to the next. And it's not necessarily that we see a huge slew of selling days taking over, although this week we did get some. Let me drop this chart back to a 1 month daily. But the way that this 22-day analysis works, it's just organically falling off, right? All that other volume we had. We've got 3 days here of heavy volume. We've got 2 days here. And we've got 3 days here. So what are we assessing? That's a buying day. That's a buying day. And you might think that's red. It's red, but it's higher, right? That's still a higher day. The next one is red, but it dropped back. Then we got another drop back, but the next day the buyer said, wait, and they came in again. And they pushed it back up. We didn't get volume on the subsequent days, but it did continue a little bit higher. Now you'll notice, now this one's tough because most of these have moved a pretty good amount. This is where I kind of put this one as a question mark, but I did give both of these to the sellers. Boom, boom. And you'll notice it's white, but it dropped. And this is red and it dropped. The reason I put a question mark there is because, I'll show you why. Because from here to here is really very minimal carry. And a lot of that volume was actually represented by this, where the buyers pushed it back up intraday off of the lows. So I'm going to leave that as a wash. And, look what I end up with, even still. Did I miss any of the days? Yes. I missed one. Sorry. I was like, wait a second. You'll notice I missed one day early on, but it's definitely showing that this is losing some steam. We said that I missed this one here. That was an above average volume day. That one is definitely a buying day. So based on what we have here, I've got 4 to 4. 4 to 4. 4 days of buying, 4 days of selling. Now I typically say tie goes to the buyers, because anytime they're selling, we expect emotions to drop a little bit. But for me here, this is definitely taking us down another peg. We were at 0.5. This is going to drop to 0.25. And the argument, I think, could be made to take it to 0. I tend to, when it's tied, I tend to give a little bit of a lean to the buyers. We are still net positive from when the chart started. So that's another thing that I look at. if where we were now was down in this area, which means we're close to where we started. Does that make sense? If I had a 4-4 and it looked like this, I would score it a 0. But the fact that I still have a little bit of an upward lean, I'm going to give the buyers the credit. Let me know if you have any questions. Let me know if you see it differently. We're definitely concerned though, because that's our freshest volume right there, and it's all sellers. The only thing that I'm not as concerned about is it just hasn't pushed it back. These are not. If these days looked like that, then I'd be like, ooh, crap, look. But they're not that big a day. So even though there's more sellers than buyers, I still don't think, oh, look, the sellers are trying to do a little smash and grab here. That's not what it looks like, right? And that's our bottom line. Okay, so first half of our analysis, we dropped a little bit, but it's still overall more bullish than anything else. Remember that this is out of 6 points, and we're at a 3. So it's strong, but it could certainly get stronger. Absolutely. Okay, let's get down here to the second half of this major market. And all of these links, Yahoo Finance, Market Watch Economic Calendar. Now we're moving into these stock charts. These links are available in the welcome doc. So Elizabeth, make sure you check in there if you want to see exactly where we're going for these. Okay, so let's get our major market. It's gotten a lot more interesting as we've looked at this. There's a lot more parity between the 4 broad market indices. But if you're looking, and you can see now this is our 200-day. We're about 9 months back. If you look, everything's pretty lockstep, but overall, there's still the NASDAQ up here leading. Here's the S&P as the watermark. Down here, you have the Dow and the Russell. Man, look at that Russell. It's at the bottom. It flies up, starts to get back into like it's going to be in a leading position. And then it pulled back so violently these last few days. If you watched, it was really quite a nasty retracement there. We're going to see how that ends up playing out. And I could see this giving back. This, if you look at what our score has done, nope, it's our log. If you look at what our score has done, we really have seen some strength as we, right, 2.5 to 0.5 to 0.75, as we saw the Russell trying to move into a leading position. We saw some strength there. This might tell us we went a little too far too fast, and this might dial back. As I'm looking at that, thinking about that already. So let's move this down. When you see 133 days, it's a very interesting perspective, because the S&P and the NASDAQ are moving almost identical to each other. The Russell moves a little faster up, then faster down, faster up. And if you look at who's leading here, it's the Dow. Right? From the end of June until now, the Dow is leading. The other 3 are kind of down here a little bit below. So that that certainly has us cock our head to the side and think, that's interesting. We drop down to 66 days. And again, NASDAQ and S&P lockstep. You can see we saw that big surge from the Russell here. That looks bullish, but as it pulls back, it's barely holding on. Dow is showing some strength as well. Yeah. The Dow's just kind of hanging out there. The Dow's hanging out, and we've seen the NASDAQ sort of in almost a slightly bottom position here. Let's go to 22 days. And on 22 days, it's kind of more of the same. You see the Russell with its volatility significantly higher than the other markets. If you're trading, so if you trade small caps as an options trader, you're most likely going to trade options directly on IWM. That's how I do it. I'm not trying to go find a small cap that maybe has slightly halfway decent options. They're not going to be, any options you find on small cap stocks are just 98% of the time going to be illiquid, and you're going to be fighting with market makers. So I just don't do it. If I'm going to trade small caps, I'm going to trade options on IWM and trade small caps as a group. You can see the volatility here, though, right? There's a lot of volatility in those small caps. I don't see anything really lagging. It's an interesting analysis. I feel still like I'm going to pull it back a quarter of a point. But I mean, if you look at this 66, it's like actually, I think I'm going to leave it. I'm going to leave it one more week. The Dow is kind of hanging out in a strong position. The NASDAQ has given back some, but still looks bullish. And we've seen such a surge in strength. Even though the Russell's given back pretty hard from its highs, it's still in quite a strong uptrend. I'm going to give it one more week before I pull it back. I'm going to leave this as is, which means I'm going to leave it as a 0.75. What did you do with it? Anyone who's scored theirs already, let me know. So Steven did give it the 0.25 pullback. I'm not 100%. I could see that. Like I said, I'm right on the fence with that. The only reason is that I like the strength, even with a consolidation from the Russell. I like the strength that it showed. So I'm going to give it a little bit of credit for that. The 22 days gave the confirmation. Yep, that's a great technique. Love it. Love it, love it. I agree. I think you could go 0.5. I don't think it's a 0.25. There's too much strength in the other markets, and it's clearly not a 1. So for me, it's somewhere between a 0.5, 0.75. Sandy says it looks really good. Yeah, I still like the way it looks. We were waiting for quite a while, if you remember. We were waiting for the Russell to participate. We're like, where's small caps? Nobody cares. No one wants small caps. The participation of the small caps coming in is going to give me just a little bit more time to process it. You're a 0.5. Yeah. Okay, sector rotation, same analysis, but with sectors. We reload this. Okay, starting off, you can see the technology and communication services so very strong as always. Discretionary, financials just below, and then industrials. Those are our big 5. That's what's brought us to this one. This is the lucrative and hard to attain perfect score. This is the only one that's full score, and it's been that way for quite a while. Why? Because there's a lot of breadth in this market. We can see across 5 different sectors. Now, this one, industrials, is not above the S&P from this time frame, but overall, just a ton of strength. When you look to find where's our defensive sectors, staples, utilities, way down here at the bottom, healthcare, energy, not far below. Let's go look at the shifting, though. So here you can see financials. Financials was phenomenal in November and December. A lot of good trades in financials. The communication services and technology, very strong still. You can see the energy, though, had a little bit of a pop. I tried to play a little energy, and it worked and then didn't work, and it's just kind of sitting there. We'll look at that. Industrials are still up in the mix. And then all of a sudden, there's that healthcare that press was talking about, led by biotech. So, yeah, we'll take a little. You can see the surge coming there. But when you look at utilities and you look at staples, the defensives, do we see the market realigning itself into a defensive posture? Not even a little bit, right? Not even a little bit, at least not yet. Here's 66 days. Financials, right? Ooh, but look at this. Now there is a little hint where all of a sudden, even though utilities haven't really done much, they've been more stable. Is that have me like, oh my gosh, you guys, utilities is up there. What are we going to do? No, this is the first even small sign of it. But we still have technology. We still have industrials. We still have communication services. The fact that utilities kind of showed up in there is that it's not even going to drop my score a little bit. right? It's just kind of, to me, the fact that it didn't drop earlier and it's been stable. But we'll see. We'll keep an eye on staples and we'll keep an eye on healthcare to see if they start to see a little bit more. As of now, I'm not seeing it. Let's go to 22 days. There's healthcare, but we still have financials. We still have communication services. We still have industrials in there, right? However, look at this. Technology has pulled back. Remember that technology is going to be one of your more volatile sectors. So when it does consolidate, it'll consolidate a little harder. Just like when it rallies, it'll rally harder. There's not enough here to even diminish the score a little bit for me. Someone else might say, you know what, Scott, I don't like what I see there. I'm going to pull mine back to a 0.75. I wouldn't argue against that. I would argue about anything more than that because it's just, you can see there's so much breadth still in these strong sectors that we've had. There you go, Stephen. I love what he said. He said, we lost tech, so I dropped it 0.25. I can always adjust next week. That's exactly how we want to look at it. Never let yourself experience too much consternation as you're going through this. Like, oh, is it this or that? If you miss it this week, you'll adjust it next week. This is a constantly evolving process. So, like, yeah, absolutely. I love the way you're looking at it. I'm gonna let mine go one more time. And then if I see it, I'll drop it. Perfect. Okay. And let's now finish off with the, let me move this over here. So my watch list is ready. Okay. Let's get the VIX and then we will. Okay. I am going to drop the VIX 1/4 point. I'm going to drop it 1/4 point. Let me show you why. So here, I'm going to take this to a 1.25. So I am going to end up at a 6. A 6 is strong. I'm not like, oh, we've dropped a 1/2 point. 1/2 point. That's just fluctuations. Our score is going to have fluctuations, right? The fact that this doesn't mean it's the start of something. Now, if we go from a 6 to a 5 next week, then we're like, ooh, we're not liking that. If my score drops, 1.25 or something, a bigger drop, then I'd be a little more concerned. But those are not things that have happened. Okay. So why am I dropping the VIX? I did hedge. It was only a 1/2 hedge because I didn't have a lot of bullish trades on. But this right here was a higher low. And you can see there's been just a little bit of this kind of escalation. It's escalating in a channel, though, which is a lot less concerning than a lot of times when we escalate like this, right? It expands. It expands. Sorry, couldn't get to the mute button. Okay. Michael says, big candle on VIX. Thank you. Appreciate that, both of you. Should it be more of a drop? So not necessarily, because even though, so let me go back and show you a couple of other things on this one. We put a lot of time into this. One of the things I've been looking at is this right here. This was where I said my line of consolidation. Why is the big red not a higher low? You mean a lower high, I think, but because, and I'm going to talk about that. So this is a higher low, but you'll notice if I go by bodies, by shadows, these are exactly the same. By bodies, you'll notice they're just a little higher still. So I did almost think to myself, what we got here, we revert what we got right there, reversed right there. It could mean that this week is going to be super important. And what's going to be super important about it is what happens next. Do we come down for a day or two like this and then start to turn? That's problematic. For me, that's very problematic because that indicates we're continuing and you never know when this is going to expand up, right? Like this back here. That's our concern, is when things start to get ugly, they can get ugly fast. So if this week we get another higher low, absolutely, I am going to be very concerned. I am absolutely going to hedge. I am going to have tightened stops, and I'm going to look to minimize and mitigate any impact that bullish trades falling apart might have. From a scoring standpoint, the fact that we've come up a little bit and expanded a little bit, that's enough. That's enough for me, right? So I'm dropping the score and I'm putting it down here. So this has dialed me back a little bit. But what I would say is this next week. Now, if this next week we have a bullish run, so let's say we get a bullish day on Monday and this thing comes down a little bit, and then Tuesday, and then Wednesday, if we can get below this point, I'll give it that half of a point. I'll give it that quarter point back. It doesn't have to get all the way down. It just has to get below this one. It doesn't have to get back down here, but it has to get to, if not even test below that level. So that level is around 12.5, right? But if it gets down to 13 and it doesn't drop any further, and then it starts to turn around, that is absolutely the institutions showing us that they are preparing to hedge. Okay, you should do the same, because when they prepare to hedge, after they hedge, they allow themselves the ability to sell, and that's what pushes the market down. So with everything else, and even at being a 6, there is a lot of concern. This is more of a trading posture question. The scoring point of this, I'm scoring the higher low, right? Technically, we didn't score this. This got a little bit above. We didn't score it last time. And I'm not scoring this as a higher high. I'm only scoring the higher low, but I'm not giving the lower high to give it the quarter point back. So 1.25 ends up at a 6. What are my concerns? I'm looking for bullish trades, especially coming out of this bounce down. Even though the market, if you look at the SPY, we actually didn't really gain much ground. At one point in the day, we had, it looked fantastic, right? At one point in the day, it looked like this, and you're like, oh, that looks like we're getting ready to bounce. I believe this had even turned at one point during the day when it was strong. But by the end of the day, we did not finish with that confirmation. We finish at a point where it seems like we're hitting a support level. This is down in a great place, but we're still waiting for the turn. So if on Monday we get this, we get that confirmation on Monday, let's say, but then it lacks follow through. It goes up another day and then it stalls, right? You're like, well, man, we're not even getting back to the old high. That's absolutely ultra concerning. We need to be ready to act. Yeah, that's whatever else. So that it's an interesting time because, certainly we could just bounce right through from there. But if we get this signal and then it fails to actually develop, and we see it find weakness through here and start to roll over, yeah, we should have a hedge on. We should have stops tightened. We should be paring back bearish or bullish trades quickly if we see this thing veer off and not continue on that trajectory. Absolutely, we can see the seasonality chart. And then I'm going to go through the watch list, and then we'll talk about this week's. Here we go. So now, typically, what do we expect? So we've moved ourselves back over here to this part of the chart. Yeah, it's the 7th where we could see a little bit more move, but from a seasonality, what do we tend to see? We tend to see a little bit of a consolidation. Remember that where is this in the priority? This is at the end. We're now talking about this. So I'm not like, oh, the seasonality chart's coming down, I'm going to do this. I look for confirmation from here. And so, we'll see what happens. But Yeah, well, there could be some headwinds for us in this little pocket of time. Although you'll notice that coming when we're at the bottom of this pocket, that's a great opportunity here in February. And then again, if we have a pullback, we have a great opportunity in March and April. Okay, we'll see what happens. I'm still bullish. I'm still looking for bullish trades. That's the bottom line. But there's more concern now than we've had for 4 or 5, 6 weeks based on what we're seeing in the VIX, right? That escalation that seems to be developing in the VIX. Let's get to the watch list. You'll see we have plenty of strong stocks still that are showing us opportunities. Apple is not one of them. I'm not going to drop Apple, obviously, because Apple is Apple. We need to understand how Apple's working because Apple is such an integral part of how the market works. Now, we started off like this, but we seem to have accelerated, right? Which actually makes it easier for recovery because if this thing pops up, comes down and gives me a higher low, the door is open back up. But I don't see that. I don't think I'm going to trade. Apple is quite reflective of the tech market. You're right. I think Microsoft as well, chips, those tend to give us a good read on it. The chips are still doing fine. Microsoft is holding its own. Apple is really struggling a little bit here. And I think it's more the retail business, right? Okay. So Apple concerning. Financially, we have Aflac. Looks good. Looks like it's possibly setting up. You can see AIG looks good, although I would probably want to see a little more consolidation to see if it gets down here to the bottom of this trend line and catch it somewhere in that, but it's still viable. AMD, did anybody take it? That's a viable trade right there. In fact, it was viable. Someone did take a big bite of Apple. This was viable in an anticipatory there at support. Now you have confirmation. Heiken Ashi, not quite yet. One more day and you'll have the ability to tighten stops based on Heiken Ashi candles. Yeah, I think that AMD is viable and looks good. Let me know if anyone traded any of these as we're going through them. I'm curious where you're putting your trades on. Amazon. Oh, it's so close. Yeah, I call that close enough to holding the 50, but it's finding some support. We're down here in an oversold area. All I need is price to confirm going back up, and I have a valid entry. It's holding this old support level. Now, am I looking for a higher high from here? I probably would just look for 155 again. That's a great move relative to the amount of risk I might have to take for that type of a trade. Merck and MDRA. Perfect. That's in that healthcare sector and biotech a little bit we were looking at. AXP still looks bullish. You'll notice the financials are strong. Boeing gave a signal. That's viable. So if I say it's viable, are you like, am I too late? Well, you still have the ability to wait for the Heiken Ashi. That hasn't turned yet. But you can see we came down, found support, started to turn. You're right. They did ground those 737s. I saw that news came out yesterday. 171. That could have a huge impact. That could have a huge impact. Puts, it's too late if the news is out. We won't see it yet because let me show you where this is going to show up. Up here where it says bid ask, that was the after hours pricing. So it dropped about 30 cents after hours on Friday, but the news came out after Friday. There's a very good chance that when we look at this tomorrow in our pre-market, we'll look at it. Don't let me forget to look at this pre-market tomorrow morning. I bet we see this down 8 to 10% actually. Already. So it's gapping is what I would anticipate. BK financials are still strong. That's definitely a core focus for me is the financials. Industrials, other than Boeing, you can see BLDR still looks strong, right? Still looking for a potential trade. Here's financials sitting at support, just waiting for the turn. Blackstone sitting at support, waiting for the turn. Citi is overextended. Caterpillar, there's Caterpillar also giving a signal. Much stronger to have Caterpillar than Boeing, that's for sure. Capital One looks strong. Oil, so oil you can see tried to turn, gave it back, sitting at support. We'll see what happens there. Costco's a little bit more consumer discretionary than consumer, excuse me, consumer staples and consumer discretionary, but this looks pretty good right here. CrowdStrike, turning, there's technology. CSX, this is industrials, a little bit flat. Delta, Michael, did you hold on? Did you catch the, I know Michael had a piece of this. DHI, home builders, looks like they're trying to stabilize, look for a move up. You can see the Dow looks so strong when you look at the diamonds. ENVX holding support, possibly starting to turn. We have signals across the technology sector. I'm Fastenal. Here's industrials. It was a big pullback, but it's still sitting on top of its 50-day. I think this is viable to consider as well. There's GE turning and bouncing. Gold still in an uptrend. Google, I thought Google was going to fire a trade on Friday. It did not end up, but I do think Meta did. Anybody trading Facebook? We'll see that in a minute here. Home Depot. Home Depot was strong. Then the buyers took a break. We had this consolidation. Definitely looks like it's finding a new support level and starting to turn. Stochastics looks strong coming up out of that. IBM, nope. Intercontinental Exchange has been a real high flyer. I think this one is definitely setting up out of the financial sector. So I'm really looking closely at ICE for a trade on Monday. Intel, maybe it's volatile right now, you can see, but there's been some great trades to be had. We've traded it 3 or 4 times here in the group over the last few months. IWM trying to find some support. JP Morgan a little overextended. KKR making a comeback. There's Meta. Nobody took this trade, Meta. Come on, we were loving the way this looked. I actually got a piece of that anticipatory on that first signal. I liked the price, even though the stochastics hasn't turned. Very strong for Meta. Let's look at the Heiken Ash and see how that looks. Still viable for a continuation trade, but you definitely want to have a tighter stop. Microsoft is a little flat still. Netflix, yeah, it's iffy, but communication services has had pretty good movement. I think that NVIDIA, for me, I love NVIDIA, but my 2 chip stocks have definitely been AMD and Intel. Bakar out of the industrial sector, I think looks fantastic. This is definitely one I'm looking for a trade. I would say industrials, financials, and a little bit of technology. Those are the 3 places I'm looking for a window Monday or Tuesday. PNC started moving already. Here's the cues. Yeah, the NASDAQ has pulled back. Does that not still look bullish to you? Because it does to me. Absolutely. RCL, here's the cruise ships. I didn't like how far it dropped, but it started moving pretty quickly already. Elizabeth said, take a look at RTX, Raytheon. Oh, no, RTX, that's RTC. RTX Group. Oh, I like it. A little overextended right now, waiting for a consolidation. What would I want to see? Let it pull on back into this trend. Opportunity. What else do we need to talk about? Earnings are coming up soon. Next Friday, we will have a slew of financial companies report earnings. The following Wednesday, Alcoa, which opens the door for 2 weeks of earnings coming through. Just be aware. Don't be caught where you're like, oh, what just happened? And you forgot to check when earnings were. It's coming up. It's around the corner. SMCI trying to bounce off of its 50. Still watching some AI stocks. Snap gave us a nice turn. SPY holding, getting ready for a support bounce potentially. You can see we have plenty of big, large liquid stocks with good options across all 5 leading sectors. And we have setups developing in at least 3 out of 5 of those sectors right now. Still dynamics? Maybe. UBS financials turned, gave a signal. UNP railroad out of industrials setting up. Plenty of time before earnings to get a trade on. There's the VIX. I am curious what that Boeing is going to do to the industrial sector. I forgot about that. I'm glad you called that out, Elizabeth. That could be interesting to see what kind of an impact. Wells Fargo was one that we had looked at. I had taken an anticipatory trade back here. I held on, still in, came back. We'll see if this thing can make a move. It doesn't have much time now. A lot of your financials are going to report earnings like this Friday. So whatever I get over this week, that's it. I'm gone before earnings. Here's Walmart. Walmart has reinvigorated itself. It broke its consolidation, made a new high, right? Got through all of this, even got through these old highs here. Now on this pullback, for me, anything in here at a higher low is viable for a trade. So when this comes down and turns, I'm definitely going to be looking in here. Maybe this week, maybe not. We'll see. And let's just quickly go look at the sectors. Here's biotech. Looks strong. We're waiting for confirmation of price turning still, right? It's just kind of hanging on. Honestly, press for me, I might just look at XBI and not bother with an individual stock. I know the liquidity is good on here for the options. So I would say XBI definitely in a setup position. Materials had a pullback, but still overall looks bullish. Communication services looks very bullish. Absolutely. I love communication services right now. Energy's kind of flat. XLF, the financials are still looking strong. The industrials still looking strong. Does Boeing affect the airlines directly? With 171 planes, and then that's a good question, because I guess it depends on how many each one has to ground and how that's going to impact. I would say initially no, but it could. Let's when we look at Boeing tomorrow, let's maybe take a look at Delta and American just as samples and see what their stock looks like. The reaction is going to be. Here is technology. It was a little bit bigger of a sell-off, but it is still holding the 50. I'm still okay with that. I think we could have an interesting week because initially I'm looking for bullish trades and we have a number of stocks showing setups. But if we get the confirmation signal and the market cannot push to a higher high, if it fails to develop, that is definitely going to, it's going to be a quick stop and reverse. I'm going to end up with some hedges on, and I'm going to look to clean those out. So we are at an interesting fork in the road, I would say, and we'll see how it develops. Okay. That is the watch list. That is the posture. Real quickly now, for GM is putting out the first electric hybrid Corvette. Oh, that's very cool. I think that the new Corvettes look pretty cool. I don't know what the performance statistics are on those, but I'm a fan of the Nissan GTR for supercars. Let's look at the trading plan. What are we working on this week? So you should have section 1 under your belt from last week. If you don't know what to write, just write something, a sentence, make a pass at it. Just put something down. It's easier to change than it is to start. So just get started. What are we doing here for market forecasting? You're going to make sure you understand your routines. You're going to understand, what do I do when I have a market posture score? What is my trading posture? What are my implications? Remember that there are videos to help you. Let me quickly pull those up and remind everybody. So here is our core information. In the content library, remember, we have your trading plan videos. So market posture is in here, and we have all of the market posture videos just underneath that. That is in the content library doc. And remember, in the welcome doc, you have everything that we're looking at, the current group watch list. So if you want to have all the stocks that we're watching, it's in there. If you want to see our historical posture, it's there. Trading plan, options log, anything you need for links, for documents, for whatever else, go ahead and find it there. And yes, I will put the email in there, Michael, so that you can continue to communicate. It's a lot. It's a lot. It's there when you're ready. That's how I'll put it. It's there when you're ready. You want to put a little time in, it's ready for you there. Also the Discord link. Yes, I will put the Discord link in so that we can join. And you can always communicate with me via Discord as well. So, all right. Well, listen, guys, I appreciate you. This should be an interesting week. I'm excited to see how it goes. This is a week where we need to remember one of our core philosophies, and that is be water. If we have to adapt, we will adapt quickly. So right now, I'm leaning more towards bullish. I have bullish setups. I have a bullish posture. But I absolutely recognize that the VIX is showing something that has a tendency to be the beginning when we have a market regression. So I'm watching very closely from both sides. All right. I will see you guys in the morning. 9:15 a.m., 15 minutes prior to the market. We'll look at the futures. We'll look at the impact some of the news is having and how that comports with our current posture and the setups that we have. And then we will go from there. Have a wonderful rest of your day. Enjoy your Sunday. Mine is snowy. I think I'm going to have to get the shovels out. It's enough that I'm going to have, well, it's not a shovel. It's a snowblower. I'm not going to be dramatic. I'll see you guys tomorrow morning. As always, happy trading.